G'day, everybody. Good afternoon, good morning, good evening, good night. How's everyone doing today? Good, whatever. Exactly. Great. Fantastic. Good to see you all, as always. Let's get crack-a-lacking. So there's the disclaimer. It's all about something you've probably seen 100 times, but of course, this is for educational purposes only, not a recommendation to buy or sell. Trading stocks and options involves risking all the capital you invest and is not suitable for everybody. Acorn Wealth is not a registered financial advisor in any jurisdictional province, so please get financial advice from a registered financial advisor before taking any action. Okay, so we'll crack over to the market. Quite a good day for individual companies. A number of the longs moved very well today. So when we take a look at the S&P 500, there wasn't really much movement at all. It was only up 0.41%. We're obviously kind of stuck in this little bit of a sideways trading range between the moving average support and the overhead resistance. We do have roughly a week, well, actually exactly a week from today, left of the bullish open range signal. So then the S&P 500 indicator, which we know and love, gives us our next signal or sets the next range next Friday, which will be followed by a short open range period. So obviously our open range gets set on Friday the 21st. We get our signal of whether it's bullish or bearish on the 24th, most likely. And from there, we really only get 1, 2, 3, 4 trading days. So it's not going to be a particularly a high value signal from a perspective of longevity, because it only gives us 4 days of if it triggers right away of value. So it could end up being a short-term reversal, short-term pullback move. It could be a continuation of the bull. Ideally, I'd like to see it continue bullishly for the remainder of June, but we will see. Right now, the momentum is still holding behind the S&P, so that is positive. Money flow is not really kind of matching, however. The S&P is almost at the same level it was before, but the money flow is substantially lower. So money flow is still kind of limping in, and obviously we're seeing that reflected in the amount of stocks that have are above the 50-day. It was still low. We're still kind of in that 42% area, but we are beginning a bit of an upward trend. So again, that may place some pressure on a continued rally, which would be fine. From a high yield bond perspective, our other smart money indicator, again, I went in at length in discussing this in last night's executive summary about how we have the presence of the inverted head and shoulder pattern. So did everyone have a chance to watch that? Excellent. So yes, I apologize for how late it came out, but I literally started my research at 4 p.m. and finished at 11:30 at night. So the moment I was comfortable that I'd looked at enough to get a real sense of everything, I sent it out. So again, I apologize how late it came in the evening, but it was a lengthier one too. But it kind of really gave you my thoughts, and again, shows you how pretty cool these patterns are, how it rallied. High yield bonds. I mean, something as large as bonds, which is a massive market. The bond market is bigger than the stock market. Even the bond market going to where the patterns told it to. So it just shows you how important algorithms are in this structure of the market, and why these rules apply so apply so clearly. So HYG rally up And as you can see, there is we've pulled back a little bit today, and just kind of going sideways at the moment until the next pattern reveals itself. Okay, so this was a let's have a quick look here. So that was actually just slightly misdrawn. That's where your head and shoulders is. Bang, 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 bang. There's the right shoulder there. Okay. And so your measurement, there you go, measurements to there, and there's the breakout. Okay. So there you can see the right shoulder a bit more clearly. All right. I hope that helps, Ron. So moving on from that, we'll just jump back over to the incredible charts. And so in terms of some of the individual stocks, yeah, there were some awesome movements. We had RGSE. Who's in RGSE? Right on. Terrific. Dennis, Jay, Debbie. Right on. Megan. Hey, wicked. Well, Megan, you just rejoined us a couple of weeks ago, right? So there's a nice little gift. So yeah, a beautiful move, up 17.75% today on top of what it had already done over the last 2 days. So again, approaching its target of 38 cents, and on very strong volume. 1.6 million traded changed hands yesterday, 1.2 million traded hands the day before. Today, a whopping 4.18 million shares, and closing at the top of its range with expanding range candles. So that's looking very healthy going into tomorrow. That's looking good, almost at its first target of 38 cents. At which point one would consider updating the take some profit and updating the stop loss to the entry signal. Now, you've also got ETCG, which was a great move, and this has been a really great vehicle to get in and out of. It's I mean, if you remember, everybody, we picked this at $8 originally, and it's ran all the way up to 48, and then pulled back, and we've had several opportunities in and out of this one along this road since March, April. Obviously, a fallen angel setup, as well as flags, which are kind of two of my favorite patterns. In fact, my top 4 favorite patterns would be flags, fallen angels, head and shoulders, and channels. So, but fallen angels and flags are my top 2 for sure. So again, we're rallying up. We've had a nice 20% move or so far, and we're very close to that first target of 42, second target of 44. If you are more of a long-termer on the cryptocurrency, it may of course go much higher, but certainly as a trade, it's close to its short-term targets here. So nice to see green across the board there. FCX was another one. Megan, I got into XON. Oh, okay, great, good stuff. We'll get to that one. FCX. Freeport-McMoRan, obviously well-known, well-established company, bouncing nicely. Now, what you've got today, what you've got over these last few days is actually what we would consider almost a cup and handle, where you've got the down, the up, and then the pullback. So it's a bit more truncated, this stock's chart, but good nevertheless. And so as we've seen it rally up and kind of pull back there, the bounce off that 5-day exponential moving average is a good sign to see, because it suggests that the moving average support is coming into play. So if the moving average support is coming into play, that's going to add for its potential for momentum, and then could continue further than that first target that we had suggested. Now, an example of something like this would be something like cash, which of course is another one I want to mention today. So FCX is looking great so far. Cash is an example where you have a similar kind of bounce. So here you had this double bottom, right? So this oscillating smart money support, an Adam double bottom. So remember, there's different types of double bottoms. There's Adam and Adam double bottoms like this. And like FCX, there's Eve and Eve double bottoms. There's Adam and Eve double, excuse me, that's not drawn very well, but Adam and Eve double bottoms. And then there's Eve and Adam double bottoms. And each different one has different probabilities, which is why just talking about buying a double bottom is misleading, because an Eve and Eve double bottom ranks 49 out of 100, whereas an Adam and Adam double bottom ranks 13 out of 100. So we would never, ever, 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 ever trade that. It's like, you know, going all in on a king 2 offsuit in poker. It might seem attractive, but the odds are really not in your favor. So So again, the differences in patterns are important. So here you can see a double bottom, Adam and Adam double bottom, which where the momentum started to play a role, and therefore this was able to go beyond its oscillating targets and turn into a momentum setup, and also a flag setup, which is how we originally found this this trade. So moving on to cash, obviously nice move today. I would consider updating the stop signal to 27.11, and this is going to this is in good stead to tackle and hit its target of around $29, which I believe. Let's just quickly check. There we go, cash. Why isn't it working? There we go. The target, first target is 29.33. Now, based on the review of this chart, we then can add a second target based on the double bottom that we've got, which, as you can see, this is one I've made earlier, up to 33.50. So we could look at a second target here of 33.43. Cuarenta tres. I'm practicing my Spanish. So there we go. Cash. So General Electric is next on the list. General Electric, which we're also holding, is breaking through the resistance. It's a lackluster beginning, but then again, it's one of those stocks. It's a love-hate relationship. In fact, I believe in 2018, it was the most hated stock by investors in North America by an overwhelming amount, which of course immediately makes me want to buy it because I'm a contrarian. And so far that's panned out really well. Excuse me. Obviously, also a fallen angel was one we picked back in around $8, rallied up to 11, pulled back, and we've been waiting for a while for it to break through its next resistance level, which it's just done, and obviously hit our entry signal a couple of days ago. Thank you, John A. And And so far it's looking good. It's early days though, and it's not one of these ones that just kind of rockets off, because it is a bit more of a larger cap stock, obviously, and they just don't have the same immediate pop potential that some of the smaller caps do. So this is expected. As to same kind of move that we saw on Bunge BG, which I bought today. Bunge also one of our alerts from last night. And again, just more of a slow and steady kind of move where we've got to be patient with it, but it does look good so far. The star performer of the class so far has been XON, Exxon. Again, also a fallen angel. This is running right up into the resistance area today. So the puts are it's just I've got took a screenshot because I was talking about this trade earlier. Where are we? Yeah. So the puts today, so far they've done really well. They're up from $1.62 to a close of $2.60 today. So nice little trade. So we, as you can see, we are holding 50 call contracts in the Acorn account. For full disclosure, but so far that's done really well. On the 8,000 we put in, up almost 5,000. So nothing wrong with taking a little bit of profit off the table here. Look, it's something that could be. Oh, sorry, did I say puts? I meant calls. No, I have not bought puts. Yeah, the January 2025 dollar calls. So we'll see what happens here. It's had a nice move so far, and but it is this resistance zone. So if we go and look at the kind of the way that fallen angels can perform, as anyone who's taken the fallen angels course will know very well, they can run into this resistance and they can pull back, then they can take a while and then go again. So they could also just surge straight on through them, but it is typical to expect some sort of a pullback. So as we approach this resistance, don't be surprised to see it kind of hit maybe $7, 17, 720, then maybe pull back for a. I mean, it could pull back as low as say 636, 640. So it has some pullback potential, but this is one where I do like the long-term aspect of it. So there's nothing wrong with updating the stop loss, for example, to 621, and there's two sides to the story here. You have the fact that it's a terrific win already. It's already up whatever percentage that is, from 160 to 260. Well, actually, I know exactly what that is. It'd be just a bit over, that'd be about 60%, right? So 80 cents would be 50%, so $1 is going to be about 60%. So you're up 60%. So to walk you through my rationale, I loaded up on a big position of stock at our entry signal, and I sold that already at 574. So I've already in the green on that. I then took a new position back into it and bought stock again, as I talked about a couple of days ago in the executive summary. Got back into it on the stock side, and I may sell that as we go into the resistance. Whereas I might hold the options for the long-term speculation side of things. So if this ends up being successful on their diabetic drugs or in a number of their projects they've got going on, and this ends up being the next TNDM and a $30, $40 stock, it's not going to matter whether you've got $8,000 worth of calls or $2,000 of calls or $4,000 of calls. It'll be a big win regardless. The key thing is, I think, here is to balance the greed factor with the money management factor. So obviously, you may not be in this at all. But if you are in this, some of you may be in stock, some of you may be in options, some of you may be in both. So when you're dealing with something like this, it's a matter of making sure that you plan for the worst and hope for the best. So don't just close your eyes and hope. Manage the position to make sure that if things all turn around, are you willing to accept whatever that result is, and what result have you planned for? So, I mean, I think a stop signal, for example, on 621 is going to not be too bad because it's aggressive enough. As you can see, we had a nice big breakout. Where's my crosshair? Not showing up. Okay, let's do it a different way. So we had a nice breakout there with volume, right? So on volume, we broke out kind of through this price area, and this is right around this 630 area. So we've got some support at 621. An even more conservative stop loss if you want to really let the thing run, maybe say 597. Right, so depending on I mean, that is really where kind of some of that core support is, where that first big push and that next consolidation happened. So 597, 593, or 621 are the kind of the stop areas that I'm looking at here, with the interest of a longer term run in mind. But a lot of you commenting on in the audience, sold 50% of my position for 60% profit today. I mean, yeah, it's a great way to think, because now you're pretty much playing with house money. So, and it's unlikely that's going to go to zero tomorrow. So you've still got some protection there. Comment from the audience, Randall Kirk, the guy who is buying so much, is a billionaire investor who made his money in other healthcare stocks. Yes, well, that's what I like about the accumulation, is it's coming from a credible source. Now, other people discredit that and they say, oh, he's a billionaire, so he's a couple of $1 million every day means nothing to him, and he's just pushing his own stock up. But I think that's the kind of feedback you get in the chat rooms. I think I'm more of the opinion that if someone's got a background like that, they're probably not just, there's another saying, but I'll use the more PG version, throwing a bucket of water into the wind. He's probably not doing that. I would think that he respects his money too. So nice move there, and so I've got high hopes for that one. BG. BG, Bungie. Oh, we've already talked about this one. MHLD, so we start getting into the more speculative side of things. MHLD, a funny story about MHLD. I was long this one earlier in the year, right here at the Fallen Angel. It ran up and hit my target, or hit a target right around this area. And what I hadn't done is I'd messed up my bracket order, and so as it pulled back, it actually ended up shorting the stock at around 70 cents. And one day I looked at my portfolio and I said, how come I am making money on MHLD when it's dropping? And I'd realized that accidentally I'd sold my stock, still had my stop loss order in, and it ended up shorting it on the way down. So it was actually turned out to work out in my favor. It was a pure accident though. So please don't build a strategy around that. Anyway, so it's been on my radar for a little bit. I originally thought it might be able to run a lot the first time round. Instead, it did end up pulling back and turned more recently. It's up slightly, nothing big or anything to write home about, but but so far so good. Michael says, so glad to know I'm not the only one who messes up bracket orders. Yes, we're all human, and we all get tired sometimes and push the wrong button in. But yeah, look, it's no matter how much practice you get. But MHLD is slow but sure. And the other one that looks very similar, of course, is ENT. This is probably the most speculative of all of the Acorn ideas at the moment, and highest risk from a movement standpoint. It was I had to pull myself away from the screen today because it was an interesting day of volatility, and this just goes to show again, we're talking about how even I make mistakes on bracket orders, but it's bigger than that. I mean, and I'm quite happy to admit to you all that as long as I've been doing this, and I, today we had three classes for different groups of like open free webinars and different things like that. So and last night 6 hours. I mean, so in the last 24 hours, I've been talking stocks for about 12 hours of it. So I live and breathe this stuff, right? And we teach it, obviously, but despite that, I still struggle with the emotional side of trading, even to this day, because it's real, and it's real money, and it's exciting, and it can be terrifying. So so no matter how much time you spend in the market, there's always going to be emotions attached when it's your money in the market. And today, just to share with you the experience, in the morning, the portfolio was up 1.5%. And we're making some good money, and I was like, great, super excited, fantastic. Went away, had a coffee, came back, looked at the portfolio. Now it was down 1%, and I was like, oh God, have I done the wrong thing? Maybe maybe I shouldn't have entered that stock and that stock, and geez, I shouldn't have got back into XON. It's hit the moving average and it's pulling back. My XON position's now losing money today. How is that possible? Oh God, should I sell it? Let me look at the hourly chart. Oh yeah, there's a hangman doji. And then I had to say, well, okay, calm down, think about it. Why are you reacting to intraday moves when these are all swing trades or investments? And at that point, while the portfolio was down 1% after being up 1.5%, so 2.5% swing, I just said, right, yeah, hey, stupid, silly, close your laptop down. You're breaking your own rules of looking at the market during the day. So at around 9:30 this morning Pacific time, I shut down the laptop. I didn't look at it again till the close, and at the end of the day, up 2.5%. So I want to. This was one of the positions that was that volatile. This position, we were down $800 in the morning, then we were up $100, and then it closed about even. And so again, you've got to really decide for yourself, what kind of trader or investor are you? What time frame do you work in? What patterns, therefore, are you looking at within those time frames, and respect them? So if you're swing trading, don't sit there and watch a 15-minute chart like I was earlier this morning and cringing and leaping for joy and then crying the next 5 minutes later over intraday movements. So again, I just wanted to share that with the group as well, because emotions are real, and if you're newer to this especially, understand that that's what rules are for, and you will have weeks sometimes where you lose money. You may even have a month where you lose money. But the key to any system is to stick with the rules and follow them through, and make sure you have proper risk management in place. Protect your positions, update your stop losses, and don't be afraid to take profit off the table, especially if you're trading options and you have a win where you're up 100 to 200%. If we look at, let's look at a couple of examples as a learning experience. WWE WWE, for example, this one hit our target, right? Our first target, our conservative target, right there. On WWE, great win on the options. Sold 2/3 of my position today. I sold the rest because, as you can see, it's turning back up right now. Still on my watch list, but they're July puts that I bought, and maybe most of you, and so you got time decay now fighting against you. The trend has changed, so the time for the trend to change back down, as well as the decay of the options, is against you. So so the best time to exit those, the juiciest sell, was right when it hit that target. We got NTNX, which was of course another one, bang straight to its target at 26. Perfect time to exit those, and I think we booked a 400% overall profit, from $2.50 up to about $9. If you take a look at HDS, of course another one of our short plays recently, bang straight down to its target, then a rally all the way up to 41.50, then back down again. Roller coaster ride again. If you're newer to trading, the easy money is right there at the first target. There was what else did we have? There's quite a few of them that kind of follow a similar type of story. So anyway, just wanted to share a little bit of that. And again, if you are maybe newer and you struggle with those emotions, maybe focus on wherever that first target is, and consider taking the bulk of the position or all of the position out at those levels, so that you can reduce the amount of emotion involved beyond that. So there's my little rant for today. And that is actually all I had. There's not a lot more to say. There were a few other ones I did want to comment on, however, not on the list. One was actually already asked about in the Q&A here. So LJPC, which of course was one we talked about a few weeks ago, is maybe gearing up for a re-entry. So right now you can see this, we are in consolidation zone. So I'm watching this very closely, and it's a little bit hard to, let's use a logarithmic graph here. So actually that's another good point. There was a question that had been asked from one of you via Jeff about when to use logarithmic versus normal charts. So really, when we use a logarithmic chart is whenever the scale has changed dramatically. So it could be when something goes from 50 cents to $2.50. That's a 500% move, right? Now, if something goes from $10 to $2.50, that's the same dollar amount of movement, but that only equals 25% move versus 50 cents to $2.50 or $3, which represents 500+% move. So whenever you start to get into especially lower price stocks, or even larger price stocks where there's been a very quick significant movement, this is when I'll employ the logarithmic chart, so that the scale is equated to the percentage movement versus the dollar figure movement. So in the case of LJPC, it's not going to make really a big difference either way, but I do prefer the logarithmic, as it just narrows, kind of pulls it all together a bit better. And this is potentially the consolidation we're seeing here, although it's not really perfect. And I'm kind of almost breaking some of the rules of patterns and probabilities in drawing it this way. So because I'm not quite comfortable in what is happening here on the chart from a pattern perspective yet, I would still be a little bit sheepish, but it's looking promising. And so I've got an alert in my TradingView account to take a look at the stock and what's going on with the pattern once it breaks above this $10.17 level, and see if there's some nice momentum going on. And the other thing I'm looking for is accumulation, or in terms of volume, looking for volume to be picking up. And if so, this could be a chance to jump into it, and one I may indeed do exactly that. Aqua, okay, which was also another previous smart money long back at in January, wasn't it? So Aqua, so it is forming a nice downward channel, which is going to therefore remind me of stocks like MGM, of course, which was another acorn alert from last night. Aqua, similar approach. So personally, I'd probably prefer to see it break through 1380 as an entry signal. But it does look like it's starting to move, it's starting to push up. A break above 1380 would be ideal. If I was long now, I wouldn't be unhappy with it, but it's still consolidating. It may very well pull back before it goes. It's still also an oscillating pattern after all. You can see that it's done this before, where it's pushed up, broken back down through, pushed up, broken back down through, pushed up. So we may get that, but it does look like in this case, the moving average is holding it for now. But I would be more comfortable once the breakout occurs. Okay. All right. What else? HBIO. I like HBIO. I'd put that on a watch list. However, I would be waiting for it to cross 220 or for the moving averages down here to cross over. Right now, it's a little bit too early for me. KIRK. KIRK, be warned that there is the potential presence of a bear flag here. So sharp downward move, upward channel, could be a bear flag. So I would not be enticed to buy that on the long side right now at all. I would be keeping it on the watch list for now. And it's too cheap for me to want to short it. So I would probably move on to better potential trades here. MOV, Movado Group. Remind me again, is that the sunglasses? I feel like I'm putting my foot in my mouth there. Watches, yeah, exactly. Okay, yep. So I'm right. Watches, etc. stuff. Okay. So you had a Head and Shoulders. Head and Shoulders setup, and we've seen that drop down to its target. So as you can see here, right? Right. Move that to the side. So there you go. There's your Head and Shoulders pattern. And that's also why, by the way, you got to remember that algorithms don't think in terms of time. Just because it went straight up in one day and straight back down in the other doesn't mean it's not a Head and Shoulders. It's actually it's where it goes to that matters, not necessarily the amount of time it takes. Anyway, so yeah, there's your Head and Shoulders pattern. So the Head and Shoulders is over. So I'm not necessarily a huge fan of this either, because if I was to trade this, it would be because it's a momentum setup, and the types of momentum setups I look for are more the fallen angel type, and the fallen angel doesn't happen out of a head and shoulders. So I would, at least not yet anyway, this is too early. So I would be more too concerned of this rattling up to 29 and then continuing a downward trend. So I would be cautious of that. We've also got okay, some other questions. Question from Gordon. I joined late. Why the predominance of options on recent suggestions? Just to give people an idea of how of different ways to look at them. So I mean, just keep in mind that with Acorn setups, there is the approach on the option side is to look at least 3 months out and just slightly out of the money with a low implied volatility and a decent enough open interest or volume. So the reason why I haven't in the past talked as much about options is because they can be very dangerous in the hands of the wrong person. And there's nothing I hate more than hearing about someone who wipes out their account because they have $5,000 in their account and they decided, well, I'm not going to make any money with this, so I may as well just, find, the best pick or the one I like the most, and I'll put all of it on calls that expire at the end of the month and hope for the best. Now, if you had have done that and taken your $5,000 on NTNX, yes, you'd have 20 grand today. If you'd have done that and bought calls on XON, yes, you'd have on short-term calls, you'd probably have 15 grand today. But the problem is, if it goes the wrong way, then you have nothing. And so a lot of people, without the proper training, without the proper understanding of taking profits as you go, capital allocation, it's like taking a brand new driver and putting them in a Ferrari, and then telling them to put their foot down in the middle of New York City. You're just asking for trouble. So but I know a lot of you love options, and a lot of people have been asking for them. So I wanted to give a bit more exposure to what the potential option plays can be. And I do that nervously because I just want to make sure you guys are all, if you're doing it, that you have the understanding. Options are a dangerous thing to walk blindly into because of the fact that they can expire worthless, and you do have to watch them, or at least program alerts to tell you when to take a look at them based on where they're going, etc. Let me move on to some of the other questions. So I hope that answers your question, Gordon. But we are here for you. So when students start saying, I'd like to hear more about options, we try to be responsive and give you what you're asking for. So that's why. CRMD is certainly on my watch list, and it's a bit too messy right now. I don't like it completely yet. It's a watch, but same kind of thing like IMMU. IMMU is another one I'm watching right now. A couple of these are just too early, but yes, CRMD is one on my watch list. AVEO is definitely one on my watch list as well. It's a bit early for me right now, but obviously this has been a beautiful move before, and I do have my eye on it. Another one, this is on my watch list already, but just a bit early for now. But I can see, John, you're another John in the group here. You must be you're keeping an eye on the past movers. SNSS. Greg says bought this one today. Well, that's perfect. as you can see, SNSS, fallen angel setup. So again, this could be something like the way, something similar to the way XON could move. So you've always got to be cautious. So rally up, pull back to support, breaks through, breaks through resistance, rallies up, pulls back to support, bounces, pulls back, breaks down, finds support, goes for its next leg of the journey. And maybe this ends up at $3, but so just be aware that stocks can move in these kinds of cycles. So probably it'd be a bit hard for me to chase this one now, but good pick, good application of the fallen angel strategy, Greg. ADOM did the same thing. Okay, yeah, similar for sure. Okay, Disney question, DIS. Well, I mean, obviously the big argument here is all of the market share they're going to be taking away from Netflix and so forth. Excuse me. I'd probably find it difficult for myself to buy this one. It's it's very scrappy. Yeah, I'd have a hard time buying that. I mean, but having said that, it's just gone up, 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 up this entire time, and the argument is they'll be the dominant kind of content provider above and beyond Netflix and so forth. So I have to say that this is outside of my expertise, because this is something that is where you're trying to buy a stock that could be at its absolute top, or could be look like a bottom when it reaches $800 2 years from now. So when you're dealing with a momentum scenario like this and trying to buy high and sell higher, I mean, I would certainly be wanting to make sure that it overcame this 142 area. So I would be looking for it to bounce up, pull back, and respect that support. And that's where I'd be looking for a potential entry signal, kind of around the bounce back up on 143. Is what I'd be looking for, and then again you could start to look at the kind of Fibonacci extensions of where that may then run to. So you could run a Fibonacci extension from here to here, and then you'd be looking at a next target at least of 156, 155. So I'd be looking at a 143 retrace re-entry with a target of 156 and the next target of 164. GDL. GDL. Oh, no, that's a spelling error, I guess. GLD, I think is what you meant. Gold. Yeah, gold's had a nice recovery. It's well, GLD has anyway. I'm just not sure if I'm a massive fan of the way it came about. Anyway, let's use the actual physical gold, because that's the driving force behind it. I mean, essentially, what we're looking at here is a potential flag scenario. So I was actually thinking of you, Kevin, if you're in the room tonight, because I think when we first talked back in May, you were telling me how you had a bunch of NUGT, I think. or maybe NUGT calls. So I was thinking of you when I was looking at NUGT last night, and hope you held on to those. So look, it's got some potential from a flag perspective. It's got some potential from a flag perspective, yeah, my target on this would be a potential rally to 1400. So I'd sooner be long gold than short. If we have a look at the weekly chart, see, what I'm doing is dangerous because I'm going right to left. You should never do that. It runs the risk of creating what you want to see. So while that may end up being the correct answer, it's important to go through the correct process of pattern recognition first. So yes, there is the potential there for a wedge breakout, but I don't think we're really going to be broken out until we get above this 1355 level. If I go back to a 10-year chart, so there's your nice little kind of downward channel. Downward channel had a breakout to, there you go, there's your downward channel. Downward channel broke out, new pattern began there. Kind of had a nice little fallen angel there from 1255 back up to 1333. Then we dropped. Then you had a fake out. I guess it wasn't perfect, but potential head and shoulders there that kind of reversed. Some support there. Right. So by going through the actual appropriate process, what now potentially jumps out to me would be the potential for this, which would be kind of a potential inverted head and shoulders pattern. Which, if that were to play out, then you've got obviously an even more bullish argument with a potential rally to some real highs of 1520. So you've got if the wedge then takes that into effect, you've got a longer term target of 1600. So you've got basically a few bullish arguments, all technically sound on this. That doesn't look too bad. So yes, I like the setup. Obviously, NUGT being the leveraged ETF methodology of trading it, and on the gold miners, which isn't necessarily how you have to play it, but as you can see on NUGT, we've got that breakout going there. So it's volatile, so keep that in mind. But it's the kind of thing that I would be prepared to take a punt on, and I'd be looking at a stop signal, say around 18.21. So I'd probably look at 18.21, and again with the long-term potential being a downward channel, which we had originally looked at earlier in this year, just couldn't break out. Now appears to be breaking out. So the longer term target of, say, even as much as $32. So yeah, say 31.83. Okay, so the symbol I was talking about before was gold, the precious metal, gold versus the US dollar, which is in incredible charts, XAUUSDO_PM. But that's the representative of the price of gold, the precious metal. Okay. Almost out of time here. OCUL. Yes, Ocular Therapeutics. You kind of got a interesting scenario here where you've got this kind of fallen angel earlier on that rallied up and then kind of formed another lower fallen angel. So you've got a smaller fallen angel within another fallen angel. So it's moving very strongly, obviously, and I'd probably find it difficult to buy it here because it's already gone so much without doing any kind of further research on the insiders and things like that. Looks great though. I mean, and I'd be looking at a target of 543. But assuming that you've already been in this for a while, I would have probably taken a little bit of profit already, and at this moving average, and my next target would be at 543. Cluster inside buying. Yeah, we talked about this one. I can't remember when, but we had talked about this a while back. I can't remember when, but yeah, there you go. Insider buying 3 days ago. 281, 291, 251. I mean, that's what I like to see. It's already up significantly from there, but yeah, look, it could easily go higher. If you got a pullback candle tomorrow to around 425, I'd probably take it. And what else did we have? There was a question, sorry, I missed it. Just scroll back and see if I can find it. Sorry, when questions fly in like this, I sometimes miss them. EPC, EPC, yeah, Fallen Angel setup, pretty simple. There's the down channel. Interesting. I kid you not, while I'm talking to you, I have 2 elk sitting right in front of my window eating my rose bushes. About 2 5-foot male younger elks chewing away at my bushes about 5 feet away from my face right now, staring right at me. I'll see if I can take a photo before they run off, and I'll send it out with my executive summary. Cute as can be. Let's see. So I'm trying to snap one. Here we go. I'll show you. I'll show you. So X, yeah, I posted the symbol for the whatchamacallit, gold. Where am I right now? Right now I'm in Kelowna. There you go. There's sitting outside my office window. Cute, eh? Way cool. If you've never been to Kelowna, it is. That's not an elk. Oh, well, it shows you how much I know about wildlife, eh? Anyway, so back to EPC. EPC does looks good from that perspective. It can, therefore, this is where I got my target from. Could easily rally up to around $38, and but keeping that in mind, the moving average is also going to pose a resistance as well as we go up. So if we look at where horizontal resistance is, you can see that's around 36. But obviously, even if we get up to 35.77, both the options and the stock is going to be up nicely by then. So depending on which way you trade it, you could obviously go either way. So so there you go. So we'll have to finish up there for the evening, and I'll leave my lovely photo of Rudolph up here. Again, I'm not quite sure if it's an elk or if it's a deer with horns or if it's a reindeer or whether it's a 4-legged kangaroo. But there it is for everybody to finish out tonight's trading room on. And again, I hope you enjoyed it. And hey, for those of you that follow the basketball, I've never watched a full game of basketball ever in my life, and I've watched every one of these finals because, of course, Canada is in the finals for the first time in history. So for those of you following along, go the Raptors. Otherwise, we will see you all next week and have a wonderful, wonderful evening. Take care.